would you have answered that question? The Twitter poll, will big tech earnings, will they derail the big tech rally? Would you have answered yes or no?
I would answer no. I mean, we stepped out of technology, but, the earnings risk premium, Brian, and you probably know this, I mean, it's negative on the tech sector. So it's been negative. So, I don't necessarily think that a so-so earnings season is going to really drag down technology.
Is there one name that you're more concerned about than others? Like a Microsoft? Like, is there one you're like, that's the big one?
Well, I mean, I think that is a big one, and there's a handful of big ones. But let's face it here, Brian. If people have done their homework and they've listened to what these companies have said and they know what the economy's doing, earnings are a confirmation process. I mean, it's what happened over the last 3 months. It's history. We need to look forward here. So hopefully, for most people, earnings reporting season is just confirmation of what they thought was going to happen over the course of the last 3 months.
I think there's like 3,500, don't quote me on the number, Scott, like 3,500 publicly traded companies that are not like, penny stocks or super micro caps. Is it true, and is it possible, and if it is it good that literally 34.95 don't matter, or 34.90 don't matter, and 5 to 10 do?
I think that when the market, usually when you're rising into a top, a meaningful top, it's very narrow. The good thing, Brian, is that over the last 5 weeks or 6 weeks, the S&P 500 equal weighted index has been in line to maybe even beating the S&P 500. So the broader market is a good thing. Narrow markets typically mean you're approaching a top.
Yeah, you get my broader point, though, Scott, which is, let's say I just own like the Russell 2000 ETF or something like this. And, Apple disappoints, and then the Russell 2000 goes down. I'm thinking, what does Apple have to do with the Russell 2000? But we know that's what would happen.
Well, that would happen. And so, you have to think about, when you think in terms of ETFs and the Russell 2000, you have to think small cap stocks outperform early in a cycle. Halfway through a recession or a slowdown, that's when you look to buy the Russell 2000 and ride it for the first half of the cycle. You don't do that really when, the economy is still slowing down. We think there's going to be a recession. This is not the time to love the Russell 2000.
All right.